Hello, welcome back. This is Wing Yi, and today's headline for my video: Date the mortgage interest rate, but marry the income property. If you receive value from this video, please smash the like button and subscribe to my YouTube channel. And finally, also subscribe to my newsletter on my website below so you can receive free weekly investment news about income property. Without further ado, let me share my screen. Date the rate, but marry the income property. You heard of this term, some of you, recently about date the interest rate, but marry the house. That applies to a owner-occupied primary homeowner. Today, I'm going to talk about applying as a real estate investor, buying and owning a income producing rental property asset class. Date the interest rate, marry the income property. All right. Here's the affirmation I want you to go with me. Let's go over, I call it the investor affirmation. Whatever your name is, in my case, I see the investor landlord after dating you with this 30-year mortgage interest rate, today's rate, whatever, 6%, 6.5%, 7, even 7.5%, or whatever, it does not matter. By putting down 25% down payment to buy an income property, of course, in an affordable, prudent market, once you learn about what I do, you subscribe to my email newsletter, you will know where to buy a property where you can cash flow at 25% down payment and the interest rate anywhere from 6 to 7.5%. It does not matter because a primary homeowner, they buy based on the interest rate and the monthly mortgage payment. As a real estate investor slash landlord, you buy based on the cash flows, based on the ability of the rent of your monthly rent covering all your debt service, including the mortgage. Who's doing that? You can outsource that obligation to someone called the tenant, the renter. That individual will make you wealthy over time. All right, let's continue. Whatever your name is, this is your affirmation. Investor landlord after dating you with this initial 30-year mortgage rate of 6 or 7.5% or whatever, and putting 25% down payment to purchase this, whatever the price point of the property, around this price, no more than 400K. From 200 to 400K, this is the sweet spot for real estate investors. Trust me, this income property initially, because of a high rate, you can get a little bit of cash flow. The beginning, I will solemnly swear to eventually refinance the loan for better cash flow in the future. This is your wedding vow. This is your income property long-term wedding vow. So, okay, I'm a little bit corny. I don't know whether this message will resonate or maybe I'm making a fool out of myself. But hey, look, I just want to push the button. I just want to be creative. That's how I am. That is my personality. Okay. Wait, sorry. Let's continue with the income property marriage vow. Meanwhile, I will take care of you, the income property, the hard asset you just purchased for years to come and never sell if at all possible. Because this rental property is, quote, history's attractive, multi-dimensional real estate asset class, bar none. For as long as I live and enjoy all the multiple streams of passive income, tax benefits, tenants pay down, debt pay down, leverage, mortgage debt, equity appreciation, the whole night, till death do us part. Furthermore, then when I pass on, this generational wealth building vehicle will be passed to my loved ones so they can enjoy for the rest of their lives and beyond. By the way, they will inherit this rental property and a step up in basis, meaning getting this asset tax free. Now, let's give one example. That's all. That's all I need to say. Okay. There's no need for me to elaborate anymore. From a high level, let me conclude this video with the following. So based on today's rate, as an investor, you're buying whatever rate, 6, 7, 7.5%. Okay, you crunch the numbers, you buy this property in a good location through a turnkey provider, through a team, through my team, doesn't matter. You buy a typical property, $325,000, brand new single family home in a great, fast growing area in a south and southeast, preferably. You put 25% down payment, 81 grand down payment, and you rent it out for a tenant at $2,400. Do not be deterred by the interest rate. You're buying a asset you can own over time, regardless of the interest rate. As long as you can pick a property which you can cash flow, even at 6, 7, 7.5%, you should be able to cash flow at least initially the first year, maybe a couple of $100, right? At least you're not in the red. So don't give me this debate me about, oh, I'm putting 81 grand just to get $200 in monthly net cash flow. Is not all about monthly first year net cash flow. It's about the totality of your return based on many dimensional factors, which I will cover briefly. So you buy this property at today's interest rate, you're just dating the rate. You can change it over all the time, but marry this income property for life if you can. All right. So this is step one: buy the property in a good location, lot of upside potential in the future. Okay, and then this is before. Then after, when and if the mortgage rate comes down, who knows? I make the projection. The interest rate can come down to 5.5%. So you can refinance. By that time, couple of years, whenever, by that time you would have increased your rent. The rent usually are increased based on inflation and cost of living. Inflation is at an all-time high. So renters are willing to pay you more rent than ever before because they have no other option but to rent, many of them, because they cannot afford to buy a home. So you can increase your rent a couple of years, you refinance at 5 to 5.5%. Guess what? After you refinance, of course, you already have at least 25% loan to equity LTV because you initially put 25%. So you have skin in the game. So yeah, you can refinance because you have good loan to value ratio per the lender underwriting requirement. Guess what? When you refinance based on lower rate in the future, and then hopefully you will increase your rent 3 to 5% or more, depending on the future situation. Then your monthly cash flow, instead of $200, has gone up to almost $700 monthly net cash flow after you refinance. See how easy for you to renegotiate your income property to better your financial position and to increase the yield and the rate of return. Okay. Then another scenario I want to paint picture. The earlier scenario is a long-term renting, annual renewable lease. Those are traditional investment methodology that has been practiced by myself and hundreds of other investors that I'm consulting with. But there's another strategy which I will talk a lot more about in the future. If you follow my YouTube channel and you subscribe to my email newsletter, you will see this picture, this pro forma, if you will. If you were to buy an investment property in a good location, you can do it in a medium term rental. Then you can rent out your whole house more than 30 days, less than 365 days. Is called medium term rental. If that's the case, again, I can only give you a big picture. You can learn more about it later from my source. You can rent it out medium term, 2 or 3, 4 months at a time to a traveling nurse or whatever tenant pool out there, which is quite a few, and to the rate of $3,300 monthly for 3 months or 4 months, whatever, to a medical professional or to someone else out there, retiree or whole host of the people, remote workers, or for various occupations. So by charging 3,300, if I factor in the vacancy factor and the maintenance service, whatever, at the end of the day, you can self-manage your midterm rental. You can delegate to a professional project manager. The case scenario is you can even increase your monthly cash flow even more, to the tune of $736. Could be less, could be more, depending on what location, the of your property, the all the amenities that you're able to provide, the whole 9 yards. And at the end of the day, whether you use a long-term rental model, annual lease, or the short-term, medium-term rental strategy, at the end of the day, over time, your income property, because you decide to marry your income property forever until death do us apart, income property is the history's most proven and tax efficient, multi-dimensional real estate asset class. I'm not going to go over all the outline here. You can pause this slide and digest the amazing multiple revenue streams that you can able to obtain by becoming a great real estate investor, landlord that you are. So hold on, I'm not done yet. One more thing before I'm done with this. One more slide, almost forgot. Here it is. The great legendary investor, Warren Buffett. Most of you know who is he? He said years ago, and still apply today, be fearful when others are greedy, and be greedy when others are fearful. You need to be greedy, not in a good way, okay? Everybody else is being fearful out there. In this current housing market and economic environment, crisis equal opportunity. You need to become a contrarian investor. Do everything what others are not doing. Okay. Go the opposite direction. By being a contrarian investor that you are, you could become very successful. All right. So to recap, you date the interest rate. Don't stay in a sideline, because if you stay in the sideline as a risk investor, because the market is projected to be flat real estate market. What if the interest rate continue to be 6 or 7 or 8% in the next 3-4 years? Are you gonna time the market? You can wait. You can wait until the value of real estate will go down 50, 80%. That's not likely to happen. Okay. So instead of staying in the sideline, waiting for something to happen, you don't know, waiting for the right time the market. No one historically can ever be successful timing the market. It is time in the market. By taking the plunge now, the interest rate you're paying right now is really almost does not matter. Do the numbers, do the math I just showed you. All right. You can always refinance. Date the interest rate now, marry your income property for the long term and forever. That's how you build your wealth generational. Okay, so hopefully this really helped you. I try to be humorous. I may fall flat on my face. Please comment below. What do you think about this video? Yes, I try to think outside the box. Maybe this outside the box thinking could be over the top. I don't know. Please make a comment, but be nice. Okay. All right. So if you see value from this video, please smash the like button and subscribe to my YouTube channel. And finally, become a free real estate member of our organization. Click the link below, subscribe your email, become a free member of our investment club, which we have several thousand members already over the years. In 20 years, I've been doing this, and I receive great free real estate investment information through your email inbox on a weekly basis. And hopefully at some point in time, you can take action, execute your action plan, so you can become wealthy. You can marry the income property for life. More than one. Multiple. Thank you so much. This is Si Win Yi. Have a nice day. I'll see you on the next video shortly. Bye-bye.